23rd of July 2022. This isn't financial advice. This is an online journal to help me improve my trading. As discussed in previous videos, my aim is to make money when they're going good in the market, take that out and invest that into long-term assets, primarily property that's just going to produce passive income. So the market had a pretty good week and I didn't participate in it. The only trade I had, I got stopped out of. So yeah, that's not good. It's a bit silly. But I don't think it's as bad as... It's initially a bit sort of down on myself during the week, but I don't think it's actually quite that bad. So the trade I had was Lee Auto. I mentioned in the previous video, this was a very tiny trade. So the actual financial cost to me was extremely negligible. So that's fine. So I bought it here, got stopped out here. So I don't think the entry was too bad. Sort of had a huge move here. It was consolidating. In hindsight, maybe it needs to consolidate more. But anyway, sort of tagged the 21-day moving average, had a good upside reversal day. I don't think in the bigger scheme of things that was a bad entry. And then it proceeded not to work. However, there's a few things to mention here. On that last video I said, well, I basically pinched this trade off of other people on Twitter. That's not necessarily a huge mistake, but what I should have been, I should just allow myself to be independent. I've shown to myself in these videos that my analysis is pretty good. I just need to back it and really just back that with confidence and conviction. The second and probably far more important issue is, I also noted in that last video about the question of relative strength. So the relative strength of this one stock was great. So this is the S&P 500, it's sort of drifting down, and the relative strength is just powering up, which is really what you want to see. And so in the corrective phase of the market. So yeah, big strong move there. So however, what I couldn't quite get my head around was where was the relative strength for its sector. Let's just get rid of that. And the relative strength of the sector, which is auto manufacturers, is really weak. And recall, this is pretty much a Tesla chart because Tesla's now such a big component of this sector. So I thought, okay, I also discussed in this last video, so I'm buying a stock in really not a strong sector. How about, because it's a Chinese, what I make it, maybe it's more of a Chinese play, so a bit difficult to see here, but yeah, most certainly Chinese stocks haven't really performed well this week. So you see the S&P started, sort of been drifting up for the last month or so, and then the Chinese stocks really haven't been doing sort of too much. So not necessarily anything too bad, but nothing sort of very powerful in there. It did look like it was sort of forming stage one, and maybe they still are, but that really remains to be seen. So I did have that very big question over Lee Auto. Am I sort of just buying a stock against a tide that's going out? In hindsight, that might well prove to be the case. We'll see. Maybe this thing just needs to consolidate more. Yeah, we'll just see. But I'll look at a few other Chinese stocks. Say Pinduoduo Edwards, it's done a sort of similar thing. Baba. So we'll go back to the EV space. Rivian actually didn't do too bad, really, to be fair. Obviously Tesla had a pretty good week. Actually, so just thinking about that, then that means that Lee coming off while King Tesla sort of actually made some sort of recovery here after earnings that were good, but I can't understand some of these earnings things sometimes, especially like selling Bitcoin. But anyway, the fact is Lee Auto didn't perform. Its group hasn't performed well. So should I bother being in this trade? or not, I don't know. Now, last video I think I went through some examples. I've got some more examples just to go through here. Hopefully I'm not crossing over too much. Didn't take this trade, but huge earnings numbers here. Market loved it. So in an otherwise healthy market, this sort of BGU thing is this thing I should be buying, and maybe I should have been buying it here. However, I didn't, because this sector was not a strong sector at the time. It's still not very strong. So this would have been made good pullback buying to its moving averages, for sure. Well, sort of okay. It's nothing that amazing, really, but definitely good considering the rest of the market. So this stock has performed well in a bad market, and it's performed well against a sector that's done really quite badly. So that's an example where a stock can perform well just because, despite being in a sector that's not performing well. Let's go through some other examples. AMD. Semis. This is when the whole semi sector was doing really well. So that was a good example of buying a great stock in a great sector, and then look at the money can make. Same with NVDA. Same with so I'm just going to read this out. Same with Shopify a few years ago. Apple, Tesla, even so going back a bit further, CMG, 2008, 2009. The sector. Let's actually go and look at that. CMG bottomed here was at October, end of October, November 2008, and just went on to do a screamer. And this was just before, so looking up here, just this bottom just before the market had, and it actually started moving. So it's a bit sort of, doesn't look that significant, but that's a monthly chart. So CMG had bottomed before the market and was moving up as the market finally found its low in end of February, early March 2009. And if we look at the sector, similar thing. The sector bottomed well before the ultimate low in the overall market. So that was a great example of buying a strong stock in a strong sector, so displaying great relative strength in an awful market. So that was ESPN back sort of time. So the question is, do I not buy stocks that aren't in a good sector? I think the answer to that is by and large yes. I think also, and I discussed this last time, sometimes you just got to have a little bit of common sense, I think. So sometimes a stock just might not be really in the right sector or the right theme of the day. So I talked about Peloton, how it was in the leisure sector, but the reality was in 2020, it was a work from home stock, and the work from home group was absolutely on fire. And that sort of made total common sense that you think about it that way. And then the other example I can think of is, I think maybe sometimes a stock is just so unique and so differentiated that it might be an X group, but that almost doesn't matter, because it's just it's at the vanguard of some new product or sort of some new thinking, or just anything like that. I did do a little bit of reading on this LNTH. I won't pretend I've got any idea what I'm talking about, but just because it's in this sector, which has been a bit stodgy, apparently they've got some great new products and whatever going on. So I think sometimes it's going to be okay to buy something that's in a weak sector, but the price action needs to be extremely compelling. That's the first point. And also the N in Can Slim, so something's really new and really sort of standing out there. I dare say Monster Beverages back in the day was probably like that. Actually, on a similar note, Celsius Holdings. Traded didn't take, probably, yeah, maybe I should have been buying there again. Not really making huge money if I did. But yeah, you can see like not a strong sector. Let's just have a look there. See, just that looks very stage 3 to me. Stage 1 if you're being generous. But maybe there's an example here where you've got this sector which is non-alcoholic beverages, which is actually quite broad. But what if someone new has come along with some amazing new product within that, it's setting the world on fire, and the chart's great? Do you not buy it just because it's leaving the rest of its sector for dust? I don't think so. So I'm going to make a note here that in general I want to buy strong stocks in strong sectors just to have everything at the wind at my back. However, be open that there might be something so amazing, something news going on, that and the price action sort of just compels you to have a go, maybe on a reduced position size. So that's the end of that conversation. I want to now just touch on the markets quickly. Now, my last video said the market was still in a red phase for me, which is to do nothing. So it's gone and had really quite a strong week here. I didn't do any trades. The only trade I did was getting stopped out of Li Auto. So I started to feel a bit of FOMO during the week, but thought, no, I'm going to just stick to my process and stick to my discipline, which I'm really glad I've done that. The old me would have started to want to find things to buy. Now, the question is, well, should I have been buying? Then my question back to that is, well, what was I meant to buy? I couldn't see anything that was coming out of sound bases into stage 2. My business is focused around just buying stage 2 stocks. Now, where were they? I've gone through in previous videos. Those old sectors like oil and gas were, looking very toppy, and I couldn't really see much to do there. A lot of the action came this week from dead cat bounce type moves. So what was one? Zoom, not a good example. Maybe Coinbase, because crypto's had a bit of a bounce. But again, it doesn't really show it on the chart. But it's gone from $50 to 70. So that's quite it's obviously quite a big move. But this isn't my process. The 50-day moving average is not rising. There's obscene amounts of overhead resistance here, looking like very much at yesterday's leader. So is that, and it hasn't gone into stage 2? Well, that's, I think it's just too early to tell that. So for me, it was just too early to tell before making any of these trades. So therefore, I didn't do anything. So the lack of chart setups. And also, remember, we're in a Fed tightening period as well, has stopped me from buying. Excuse me. Now, we'll see whether that's in a few weeks or a month or whatever it's going to be, if that was a mistake of mine or not. However, what I am very glad about is I've had the discipline to follow my process, ignore the index. The index isn't my concern. So I've stuck to my process. My process said, well, there's no actual trades to take here, and therefore just sit it out. I do accept there's probably like a few trades here and there that maybe I could have taken, but we're not seeing sort of broad-based chart setups here. So go back to that Celsius one. Yeah, that one looks fine. The 50-day moving average is rising. That's 21. Maybe there's a pullback entry there, but tough going. We'll see if it sort of just gives us more setups. I said that before, the Chinese stocks were acting badly, so that was maybe one of the sectors that was going to start to stand out. That's flopped. So yeah, I am going to finish there.